Good morning, traders, and happy Friday. How's everyone doing today? If you guys are brand new, go ahead and hit that subscribe and smash that like button. You're in the showdown. If you guys are brand new, we do some live trading. I got our guest, FxBigDog, that'll be joining us, where we're going to do some live trading. We go ahead and trade 5 pairs that we choose, and we use our trading tool to go ahead and implement these trades. So stay tuned to see how we use this tool and how we implement these trades and how we analyze the markets for today. So if you guys are ready, we're going to get started right after this. All right. Welcome back. How you doing, FxBigDog? I believe you're muted there, Big Dog.
Maybe it's a good thing. Maybe you don't want to hear what I have to say. It has actually been a roller coaster ride this week. The markets have been absolutely brutal. We've got Jackson Hole. We had the Breck Summit that is it completed yesterday. We're now heading into the second day of Jackson Hole. We're heading into the weekend. Saturday we will get the final day. So it's going to be a crazy ride. It's going to be a crazy ride as we're heading into the Sunday Open. I believe Sunday Open is going to be really, really fun. Now, I say that with sarcasm because, you know what, we don't know really what the Fed's going to be talking about, or at least what the meeting's going to be discussing around what the Fed should be doing in the next rate hike. But we've got a sort of like an indication, a hint, and if we look at the technicals, we can also see that the technicals are reading that we should be expecting a downside move in the dollar. Now, with expecting a downside move in the dollar, we all know that there is a lot of wash and rinse in the market. It happens over and over again. And it's no different to what we're seeing right here on the CAD Swiss, no different to what you're seeing on the US dollar CAD. It is just pretty much I was going to say, I don't know if I can. It must be. Is this a G-rated room? Because I've got a couple of words I could say about the dollar. So anyway, point is, the dollar is definitely setting up for a downside move. Now we just had the stock market opened up. Dow gapped up higher from the close of yesterday. It is higher on the day, but it is not sustaining itself. It's not holding itself in that area. If we actually take a look and see how the Dow actually moved this morning, it had a gap open that was higher, but then it's come back and pulled back on the open. And so, is this what we can call, and let's just go ahead and fix it up a little bit there, Cam. Is this what we can call is this called a fade the gap, or is this actually a fill the gap? Now, what the difference is, it's basically saying that either the market gaps up higher and it comes back and it reverses against the opening move, and what we call is fill the gap. But everything's pointing in the direction of a fader gap move. And when I say fader gap move, what we're talking about is a risk-on scenario. Risk-on scenario would mean that dollar would sell off and that we'd see the stock market rally. Let's go take a look and see a little bit more about what's going on here on the chart. Here is the Dow Jones. And as you can see right here, we are sitting at a key level of support right here. If you pull up this trend line, I can make a little adjustment to it just to get that showing. There we go. So we're at this key level of support right here. And so a rally is due, and the rally is due even if it comes back up here to this area right here. A rally is due. We can also see that the market also created this wave structure down south right here. This will be our first wave going down, and then whether we're looking at this as a second wave, the third wave going down right here, or we're looking at this as a third wave, correction is still due, and we're looking for price to go up and take out the high right here, as it perhaps sets up another move to the downside or continues to rally. So off the support right here, we are expecting rally. Now, with yesterday's bearish move, a lot of people are saying, well, it doesn't look like we're going to be able to fill that gap. But I think we're still going to go ahead and see price moving back up north. If I go down to the lower time frame, I can see that the lower time frame is coming off an oversold condition right here. We see unhit pivot points in the market right about there. And so again, rally is due, and you can see it's still chasing after that previous high. Now we have to get through this bit of support right here. And if we do get through that support, which is now becoming resistance, then we can see price getting up to around about 34,700. We'll have to see how that plays out. Now let's go back to the calendar right here and take a look and let's reflect, because Cameron, I appreciate you bringing me into these sessions on a Friday so we can reflect and see what's going on with the market and just get an overall sense of what the market has done for us this week, and so we can take that information and use it as we go ahead and analyze the market, the rest of the market. Now I want to go ahead and say this before that. In 5 minutes, we do have the consumer sentiment coming out. This is revised consumer sentiment. This is big deal. So let's see how things play out. Remember, we're expecting a weaker dollar based on risk on a trading environment. So let's see if the fundamentals line up with what we're seeing technically, and of course what we anticipate based on the breakout of the Dow this morning. Now, the rest of the week has been pretty wild. We've had flash manufacturing has affected both the euro as well as in fact, all three of them, the euro, pound, and the US dollar, has been usually been affected by the flash manufacturing, which shows that there is contraction in the economy. And if there is contraction, that means that the rate cuts are something that the Feds may be looking at. Now, Jackson Hole this week is going to be that sort of discussion, around, hey, are we in a deflationary position where the Feds need to go start thinking about rate cuts? And if that's going to be the case, and that is something that's going to be discussed over the weekend, then we can certainly see a bearish move to the downside. In fact, bid selling on the dollar as we're heading into Sunday's open. Real interesting to see how things play out. Again, 5 minutes to go before we see sentiment. If the consumer sentiment comes out much lower, there is no doubt in my mind that the dollar should sell off. Of course, the market's got its own mind as to what it wants to do and how it wants to react. But we're definitely going to go ahead and take a look and see how this plays out. So this is a really interesting setup at the moment right now. I don't know if we want to hold back a little bit before we look for some trades. But you know what? Let's do some trade setups and let's go ahead and just analyze it and trade based on technicals. And let's forget about the fundamentals, but really just address the technicals before the sentiment comes out. All right? So with that being said, I think I'm going to take on the first trade, and I'm going to take on a US dollar trade. Whether it's going to be US dollar CAD or it's going to be Euro CAD, Euro US dollar, I'm going to jump into one of those first, Cam, before the news comes out. So here we go. I'm going to actually, no, let me take a look here. Let me see Euro US dollar. Where's that at? Okay. And then I'm going to go to, all right, I'm going to take the most complicated one right here, and that is US CAD. Now, today's US dollar CAD right here, we were looking at this high holding over here, and I think the market has gone ahead and spiked above. Let's see, the high is at 305. Let's see at 3. What is this level? 3. We got the high at 3. Yep, 3.1. So this high has been taken out. So the question here is that a lot of traders look at it and they go, "Oh yeah, big dog. Because this high has been taken out, we now going to go bullish?" No, the answer to that is no. What we do is we sell resistance and we buy support. All right, and if the resistance breaks, it breaks. So Cameron, I'm going to go ahead and do this before the news comes out and sell right now on US dollar CAD because I'm sticking to my game plan. I'm also seeing a negative divergence possibly sitting up over here as well. The oscillator is moving down. Price has just moved up and taken out the high. I'm seeing negative divergence. So I'm going to go ahead and say I'm going to sell US dollar CAD. And I'm going to go ahead and look and see what the news comes out in the next 2 minutes and see how it reacts. But sell right now. What have you gone ahead and put it in?
Yep, you got 36.01.
Okay, 3601. So we're in at 3601, and we short on the dollar. Now, again, remember, forget about the news. All right, we don't know how the news is going to come out, right? I don't know if it's going to be positive or negative. But what I'm doing is I'm trading based on technicals. Technicals tell me right now that resistance is right here. Now, for those that follow me on my Telegram channel, I did go ahead and post that we have sentiment, and sentiment currently right now on the US dollar CAD is bullish. All right, contrarian sentiment, which means that there's still a lot of buyers in the market that are pushing the market up. But of course, this can change intraday. All right, within the intraday, it can change. And if we can look over here on the US dollar CAD, the trend is up. But traders, remember something. There's different ways to trade the market. Even though the trend is up, sentiment is up, we're still at resistance, and all we're looking for is 20 pips in the market. So I'm just looking for a reaction off that resistance. Now, if I really want to be conservative, then I could go ahead and wait for bearish candlestick formation. I can go wait for it to break a counter trend line. I can go wait for the trend to reverse bearish before I go ahead and look for some sells. I mean, that would be another way to address the market for as a conservative trader. But the strategy that we trade, that Cameron and I trade, you trade, and we post trade ideas on, is based on an aggressive approach. It's like it's a no fear approach, and the no fear approach is taking a strategy and saying, "Hey, listen here, I'm going to trade the market at support and resistance. I'm going to sell and buy at those levels, and I'm going to cost average using good equity management." Because traders, we can also blow up our trading accounts if we're going to be very aggressive on our risk management, right? If our risk management is too much, then what we're going to do is we're going to end up blowing up our trading accounts. Now, let's go take a look and see the number, and then we're going to decide on, I'm going to go jump into the next one, Euro US dollar. So let's go do this. Let's take a look what the number came out. And here it is, it's pending. And there it is. Okay, it's negative. Okay, so it came negative on the day. So Cameron, I'm going to go ahead and do this. Go to Euro US dollar and go buy Euro US dollar right now. All right. Go ahead and buy Euro US dollar. Now, even if the market comes back on a corrective move, so if we see over here on the 15-minute time frame, we can see that the price is testing over here. So if price is going to come back and retest, let's see, we see a little dip, and we see a little test right here, and then a rally, we're still going to pick up a second position, and then we're going to make some money. So I'm saying let's go in on a buy on Euro US dollar, and now we can start banking on a dollar weakness based on the sentiment. So after the fact, we get dollar. We got the market creating this this sort of resistance over here. We had a little bit of a pullback. We got the data that came out reported a negative dollar. I'm expecting Jackson Hole is going to end up pushing for a cut in interest rates. And so everything to me is still saying, let's go ahead and trade against contrarian sentiment right now, because it's an intraday move we're looking at. All right. It's an intraday move. We're not trading based on swing trades when we do this. We trade it based on resistance and support levels, and that's it. So let's take a look and see how this plays out. Now, very importantly, when you're trading this type of style, I want to go ahead and lay it out here. And this is for those traders that follow the system. If you've got, let's say you decide, okay, I'm going aggressively in this trade, but you don't want to risk all your whole portfolio, right? You might want to go ahead and say, hey, if I'm going to go ahead and trade this, I want to go ahead and cap myself with a certain amount of risk on each currency pair, which means you can do that. And we've seen, and I've done some testing, back testing on this, it works out just perfectly fine. It doesn't matter if you want to take some cuts, because what does matter is that we continue to get in and out trades. And if we keep doing that and we do minimize our losses, we will keep building up our account slowly. It won't be as aggressively building, but it will build it up slowly, which means that if you said that, hey, big dog, my maximum risk on my total portfolio is 20%. Maximum risk. And you're trading 5 currency pairs, right? 1, 2, 3, 4, 5. And you say 20% is my max. Then what you would do is you would go say, okay, if I could take my currency pairs that I have and say, let's say I max it out at 4%. And if I take 4% on each currency pair, and I say, if I ever get into a 4% drawdown on each currency pair, I'm going to go ahead and cut my losses. And you'll find yourself that what you've got to do is you've got to analyze it, or not analyze. You need to calculate it to find out exactly, what are you making per month based on trading that sort of risk. And if you're making, let's say, 8% to, or let's go a little more conservative. Let's say traders are making anywhere between 5 to 8% a month. All right. So if they're making 5 to 8% a month, and we have, let's say, one or two currencies, maybe let's say three currencies. In fact, let's get crazy. Let's say four currency pairs per year ends up blowing out, and we take a 4% loss. All right. So four currencies, because what I've noticed over this year in 2023 is I noticed the market's doing a lot of this, where it goes ahead and dips strongly and then goes sideways. Then it rallies, and then it goes sideways. Then it dips and goes sideways. It does this frequently. And so if this is going to be the case, right, if we're going to see this type of scenario taking place, then what we need to do here is we need to go ahead and say, hey, we'll take our losses. And if it happens 4 times a year and we're losing 4%, that means that we're losing 16%, all right, 16%. And if we're losing 16%, and we're gaining between 5 to 8% per month, that means you're looking at anywhere between 60, and help me with my math here, Cameron, that's 88 is 96. So between 60 and 96% a year. 5 times, yeah. So 60 to 90% per year. And if that's what you're hitting, and you got 16% loss based on your blowouts, you're making anywhere between 44% to 80% per year. Traders, that's still really good. So don't ever get to a point where you're like, oh, I can't cut my losses. All right. Remember, all we're doing here is I'm showing some trade ideas. We're sharing trade ideas. How you manage that and how you want to go ahead and manage your own risk is going to be up to you. All right. But as long as you stay consistent what you do, you will see consistent results. It's important that you be consistent in what you do. All right. Okay. Now we've taken a little time here to explain a couple of things here. Let's take a look. Oh snap! Are you kidding me, Cameron? Did we hit our 20% on that 20 pips yet?
I think we did we?
We should have.
Oh yeah. Yeah, we closed
We're
out
out.
we closed out the euro and we closed out the US dollar.
There you go, traders. Both trades. Snap, snap, snap. All right, there we go. That is 40 pips that you've probably made. That's the fastest 40 pips that you've ever made trading in this market. And it's all coming back from no fear, traders. You got to get in with no fear. If you're going to start becoming fearful in your trading, guess what? You're always going to second guess the market. And when you're second guessing the market, guess who's making money? The person that is not fearful about the market. How do you become fearless in the market? All right. How do you become fearless? Did I say fearful? How do you become fearless in the market? By making sure that your risk management is properly calculated so that you don't worry about losing money. If you worry about losing money, you're never going to make good trading, right? And you have to realize that going into becoming a trader, you have to accept that there is going to be losses. And there's going to be times that things aren't going to go right. And if you're going to fear that, if you're going to fear loss, then you are not going to be successful in trading. It's just simply that. All right. Cameron, let's go jump in and see what else has got there. All right, I'm going to let you go. You got some currency pairs you want to go and flip over to.
Yeah, I'm I'm looking at the New Zealand CAD and the Aussie CAD, and a little hesitant on what the movement's trying to do here, the direction. So I'm looking at the CAD Swiss here, and I'm starting to see a nice reversal happen here on the CAD Swiss. We're starting to see this bullish pattern starting to happen here as we're breaking this previous high, right? Price broke this previous high, so we're starting to see this reversal, this bullish trend starting to happen. But now we got this break of this high, so price broke through this high, and now we're seeing price kind of just retrace back down. Obviously, price wants to come back, grab some liquidity here, and then continue to move in this bullish move. So I'm looking and saying, okay, well, let me take my fibs here and let's see from this low to this high. Let's see if price retraces back to my 618 year. So here's my nice retracement gold zone right here, and this is also in a consolidation zone. So I like that price wants to maybe retrace back into this consolidation zone. So I'm expecting, okay, maybe we see a little bit of maybe a 10 pip move here in the CAD Swiss of some retracement, and then we see this bullish move. So if I'm expecting this CAD Swiss to kind of rally after this 10 pip retracement, as price comes back in this consolidation, we might see maybe some sideways movement as price consolidates, but we're expecting this is going to be the reversal point. So if I'm expecting the CAD Swiss to take a nice rally after this low retracement, then I can anticipate that we can see some bearish move in the Aussie CAD and New Zealand CAD. So I'm looking here and I'm saying, okay, well, let's go take a look at the 4 hour here on the Aussie CAD. And I'm saying, okay, well, we've been in this downtrend. Okay, we've been in this bearish trend, and we've been in this bearish channel for a while, as you can see for the longest day here. And then you can see that price is testing the support, had this correction test support here on this trend line, and it hasn't validated a low yet here on the 4 hour, but we can see, all right, price did retest um, this level of support and resistance right here. This is our previous high. There's some lows. So we did see price kind of break above it. So it looks like price wants to continue to retest this level here. And I said we might see a little bit of a retracement on the CAD Swiss. So we might see the Aussie CAD just kind of push a little bit here at this resistance here. And maybe we start seeing price continue to fall, break out of this trend line. Obviously, I would like to wait till I see price break below the trend line for me to get in. So it's kind of more me just kind of anticipating what I can expect. And we got this obviously from the news here. We got this little pump and dump right now. So it's not one of my best setups to get in here, but I think we're going to see a little bit more of a bearish move in the Canadian. What do you think about that, Big Dog? You think we're going to see a little bit more bearish move here?
On the, you mean on the
On the Aussie CAD, New Zealand CAD, and see a bullish in the Canadian. Sorry.
You know what? This is coming back down to a Canadian dollar itself, right? Which is oil price. And if we look at the oil price today, we are hitting a little bit of resistance, which means that it does show that we, you know what? Let me share my screen here and let's go ahead and take a look here, because I think this is important. I think what Cameron's talking about is so important, right? You're looking at a lot of crosses that are based off the Canadian. If I look at oil prices right here, oil prices sitting over here at the support right here, and it looks like what's a break north. We're in this bullish flag, but we haven't broken through yet. So that means oil's going to get stronger. It should be. Now, there is a little bit of an overbought condition right now, so which means it could be a little bit of a correction move. So if I go to the lower time frame right here, and let's pull up the lower, and this is the 15 sitting up over here. If we look at the 15, what do we have? We have the market creating this low high here. Prices hit the 1.618. So we're in a retracement move. And then this is now going to be our next AB move going long. And now we're at the 5.0. So Cameron, actually, I think no, oil price is going to push high. I think the Canadian is going to get stronger. And so on your end, where you're looking at selling New Zealand CAD and Aussie CAD, I think you might be right. But before we go and make a decision, let's go take a look at the technicals on Aussie CAD and New Zealand CAD. And this is Aussie. So this is the issue that we have here. We got good support here. We got a big look at this morning star right here on the daily on it. So the New Zealand CAD shows a nice little morning star. We got a retest of that. So we're actually thinking this is going to be long. So which means that we might end up seeing New Zealand and the Aussie actually start strengthening after the weakness that we've seen over the last few months. This might be a little bit of a bounce that we're expecting right here. In fact, let me go to Aussie CAD and we can get consensus on this as well. Aussie CAD right here. Same thing. Look at that. Got a little bit of a morning star right here. Price come back to retest. Actually, I think we're going to get an upside move. I think we're going to push north. I think if the market comes down, it'll be short, but it'll be midterm long on Aussie CAD and New Zealand CAD. and that may not be anything to do with the Canadian dollar itself. That just might be just because of a little bit of strength, and the strength that the Aussie and New Zealand dollar are going to get from this technical setup. Oh, wait a minute. I'm also seeing here there's a resistance level that we seem to be stuck over here at. See that resistance there, Cam? At that resistance there, let me go to the New Zealand CAD. And let's pull up a bit of resistance there too. Oh, snap. Look at that.
That's the daily you're looking at, right?
That was the daily, yeah.
Yeah, because I'm looking at the 1 hour here, and then looking at the Aussie CAD this is where I'm expecting this. We got this correction, this bullish correction. I'm expecting this is where price is going to reverse.
Buy both of them. Buy both of them. I would buy both of them, Cam.
Okay.
Yep, buy both of them. New Zealand CAD, Aussie CAD, both buys.
Okay. We'll go long. We'll go long the Aussie CAD, and then go long the New Zealand CAD.
Yep. Yep. Did you do anything on the CAD Swiss?
No.
Buy. Buy.
Buy all three?
Buy all three.
Okay. Let's go ahead and implement that real quick.
Yeah. All right. So we're gonna jump in on a buy on the CAD Swiss as well. And if I look at the chart here on the CAD Swiss, look how it's tested this support here again. And this is key. As the market comes back into the range, it creates this five-way structure, 1, 2, 3, 4, 5. Then it comes back down. It isn't taking out the wave 4 right here, but it does come back to retest the support here. This is going to go long, and we're going to see, looks like, if I'm right, today we should get to 65.40. Today we should get to 65.40. In fact, I'm going to do this. I'm going to go ahead and do some housekeeping here. And I'm going to stretch this out. Yeah. Today we should get to 65.40, but we're on our way to 65.68. We're on our way to 65.68. Let's take a look at the and look at that. Dow, as I mentioned, fade the gap today. Fade the gap move today. Dow opens up. And now we're looking for Dow to continue to be bullish, which means this is a risk on, risk off environment we're looking at. Take a look at this setup right here. US dollar CAD, it's a sell. We're looking at CAD Swiss. CAD Swiss is a buy. Where is the other one that we're trading here? All right, I do trade this pair, and I trade this pair as well. And then I also trade, let's see which other pair do I trade. Oh, those are the ones ready. But yeah, so we're looking at a good positive move on the Dow, and that's what we really want to see. Positive move on the Dow, risk on trading environment. We're up 65, 68, almost more, and we're just going to trade a risk on trading environment. All right, we're trading a risk on trading environment this morning. And it's called Fade the Gap. All right, traders. That's pretty much all we have today. Hey, normally we run a sort of a giveaway on a Friday, but on Monday, Tuesday, and Wednesday, I'm out of town. Cameron's out of town, so we're not going to be around, and which means that we're not going to be able to give out a giveaway today because we're not going to be able to give you anything, or Cameron's not going to be available to be able to give you the full benefit of that. But be back next Friday. Next Friday, we've got something real special out for next Friday. A great giveaway next Friday. You want to be in next Friday as we go ahead and jump into the market again, analyze the market, break it down, but also there's a giveaway that we're going to be giving away before the Labor Day weekend. So get ready, get excited, and that's pretty much it from me, Cam.
All right. Well, yep. There it is. I'll see you guys. I mentioned
Oh,
yesterday.
sorry, Cam, my bad. Let me just go ahead and. Hey, guys, just one thing here. Just remember something. Inside the description down below is a Telegram channel. Make sure you go ahead and check out the Telegram channel down below, because that gives you all the trades that are popping out. Follow me on my Telegram channel if you're not already. I'm posting contrarian sentiment trades. Check it out. I'm posting some information. I'm always keeping you guys in the loop on that. And then also, Cameron, we have to go ahead and roll. We have to just let everyone know that this video has been sponsored, and because of the sponsorship, we want to share with you a little bit about the sponsor. Cameron, roll the tape. All right, guys, if you're looking for a broker and you're looking to find a broker that's going to give you some good spreads, great leveraging, check out ACAP. The link is down below. When you sign up with that link down below, let us know, because we want to give you something special. Send us an email. Let us know if you sign up with that link. We want to give you something special to help you with your trading in the first month. Make sure you go ahead and send us an email once you've signed up with that link, and we're going to go ahead and help you get started for the first month. All right? All right, traders. With that being said, happy trading. Cameron, last words?
Yes, I was gonna mention. I did mention yesterday in the VIP room about next week's sessions. As Big Dog said, I'll be out of town, so just make sure you have your announcements notified in the Discord, as I'll be announcing the time difference for our session on Monday. We'll be starting a little early on Monday, so just make sure you keep that notified. I haven't posted anything yet, but I will be posting something over the weekend, because I don't know what the exact time yet. So we'll be doing an early session on Monday, and then I'll let you know about Tuesday and Wednesday. We won't have those sessions on Tuesday and Wednesday. So just keep your notification on the announcement in the Discord. I'll be announcing this weekend.
All right, and just a quick update on the trades at the moment right now. Looks like we're up on the CAD Swiss. We're down on both the Aussie CAD, New Zealand CAD, or just about break even. No, we are down on both of them right there. So we're probably going to get in additional trades on that. So keep your eye open on the Telegram channel, traders, as we see how the trades play out this morning. All right, that's it. Thank you, guys. Have a great weekend. Love you guys. See you back on Friday.